Rich people treat taxes like an escape room, except every time they think they've solved it, they end up locked inside with the IRS holding the keys and a smug grin. Fact 1. The yacht that sank its own owner. Let's start with the billionaire who thought he could hide his yacht from taxes. Yes, this man built a 150-foot floating palace and registered it under a shell company in the Cayman Islands to avoid unnecessary attention, which worked great until he posted a full virtual tour of it on YouTube. The video featured his face, his name on the towels, and his dog wearing a collar with his initials. The IRS didn't even have to investigate. They just watched the video, paused at the part where he bragged about the custom gold-plated espresso machine, and sent him a letter that basically said, "Nice boat, it's ours now." He tried to claim it was a rental, but the court disagreed. Apparently, rented from myself doesn't count as a legal business structure. The lesson? If you're going to commit tax evasion, maybe don't hire a drone crew to film the evidence in 4K. Fact 2. The art collector who outsmarted himself. Next up, meet the millionaire who thought he found the ultimate tax loophole: art donations. His genius plan? Buy absurdly expensive paintings, donate them to a museum he literally built in his own basement, and claim it as a charitable deduction. He even made up fake visiting hours. Technically, anyone could view the art if they somehow found his unlisted address, passed 3 security gates, and rang a doorbell shaped like a miniature Rodin sculpture. The IRS was unimpressed. When auditors visited, they found 0 signage, no ticket booth, and a guest book signed entirely by family members. One page even said, "Nice house, Dad." The government reclassified his museum as what it obviously was, a glorified storage room for tax-free luxury. He ended up paying back taxes, fines, and the humiliation of watching his private institution of modern art get auctioned off to real collectors. It turns out, if your museum gift shop only sells fridge magnets of your own face, it's not a museum, it's a shrine to stupidity. Fact 3. The offshore genius who forgot about Wi-Fi. Now let's talk about the hedge fund manager who tried to hide his money offshore and accidentally live-streamed his own tax fraud. He set up a consulting firm in Bermuda that conveniently had 0 employees, 0 clients, and 0 actual work. The only thing it did have was a beach view and a shell company credit card that paid for his infinity pool. He bragged about his offshore business lifestyle during a Zoom call, forgetting that the background showed his company's office, which was clearly just his vacation villa, complete with a tiki bar and a neon sign that said, "Tax this." The video leaked during an investor presentation, and within days, investigators connected the dots faster than you can say deferred income. He ended up testifying that the company was metaphorically based in Bermuda. The judge disagreed, pointing out that metaphors don't have bank accounts. Moral of the story: if you're going to commit financial crimes, maybe mute your webcam first. Fact 4. The crypto king who thought the blockchain was invisible. Our next contestant in the Catch Me If You Can't Do Basic Math Olympics is the self-proclaimed crypto millionaire who believed Bitcoin was untaxable because it's digital. His logic: if it exists on the blockchain, the IRS can't see it because, quote, "it's in cyberspace." This man moved millions through crypto wallets registered under usernames like TaxHuloL and Satoshi No Paper Trail. For months, he gloated online about his sovereign financial freedom, even tweeting, "The government can't track a ghost." Spoiler, they can, especially when the ghost keeps tweeting his wallet address. Turns out, blockchain transactions are literally public. The IRS didn't need to hack him, they just scrolled. When agents confronted him, he tried to explain that his crypto wasn't money, it was a vibe. The court disagreed and converted that vibe into a very real 6-year prison sentence. Ironically, his final post before being arrested read, "You can't jail the future." The future disagreed and put him in a cell with no Wi-Fi. Fact 5. The celebrity chef who cooked the books. Then there's the celebrity chef who thought he could season his finances with a little creative accounting. His empire included restaurants, cookbooks, TV deals, and apparently a secret ingredient supply company that existed only on paper. This company billed his own restaurants for fake truffle shipments, allowing him to expense millions as business costs. Everything went smoothly until one unlucky accountant noticed the invoices were all signed by the same person, his dog's name. Yes, he'd been signing tax forms as Mr. Bark Ruffalo, Chief Truffle Officer. The IRS didn't even need a full audit. They just laughed, confiscated his Range Rover, and called it a day. When confronted, the chef tried to argue it was a branding experiment, claiming his dog was part of a marketing campaign about trust in flavor. The judge said the only thing he'd successfully cooked was evidence. Now he's banned from running restaurants, and the only thing on his menu is humble pie, served cold, without deductions. Fact 6. The heiress who tried to write off her horses. Next up, the trust fund princess who decided taxes were for peasants and accountants. She owned 12 purebred racehorses and, in a stroke of delusional genius, claimed them all as business expenses. Her argument? They're emotional support investments. She even tried to deduct custom saddles, spa treatments, and, no joke, a horse therapist named Chad. When the IRS flagged her $800,000 equine wellness deduction, she fought back by declaring herself the CEO of Gallup Inc., a company she registered the same week as the audit. Investigators visited her headquarters, which turned out to be a barn with a Wi-Fi router and a Keurig. Her defense crumbled faster than a sugar cube in warm water. She ended up paying triple in penalties and losing her prized stallion, which the government auctioned off to cover back taxes. To this day, she insists she was targeted for innovation in emotional capitalism. Translation: she tried to make her horses dependents. The IRS made them assets. Fact 7. The tech bro who tried to expense his entire life. Meet the startup founder who decided to live his best tax-deductible life. He registered a company called Synergex Global Solutions, which, fun fact, sold absolutely nothing, and then started filing every expense as a business necessity. His Tesla? Mobile conference room. His penthouse? Remote workspace optimization unit. His girlfriend's Bora Bora trip? Team building retreat for morale. He even deducted his Netflix subscription, calling it market research on digital trends. For 2 years, this financial fantasy somehow flew under the radar until he tried to write off $47,000 for creative stimulation amenities. Translation: a gaming PC, a personal chef, and a hot tub. The IRS audit report literally called his tax return a work of science fiction. When confronted, he told agents, "I am the business." The agent deadpanned. Then the business is bankrupt. His startup folded, his assets were seized, and the only synergy left in his life was between arrogance and bankruptcy court. Turns out, you can't expense your ego, not even in crypto. Fact 8. The oil tycoon who tried to hide his money in a church now, for the man who took pray for financial protection way too literally. This oil tycoon decided to donate millions of dollars to a church, the same church he secretly owned. He called it a divine investment vehicle, complete with sermons about the sacred power of tax efficiency. On paper, it looked holy. In reality, it was just him moving money between his own shell companies while wearing a cross necklace worth more than most people's homes. He even held Sunday services in a rented hotel ballroom, hiring actors as worshipers to make it look legit. Everything unraveled when one of those actors, a very enthusiastic Jesus impersonator, posted behind-the-scenes photos on Instagram tagged Cheer Church of the Bag. The IRS didn't need divine revelation to shut him down. They revoked his tax exemption, seized his assets, and fined him for fraud. In the end, he claimed it was all a misunderstanding of faith-based accounting. Sure, because nothing says holiness like laundering money through fake miracles. Fact 9. The banker who tried to deduct his divorce. Here's a love story only a tax attorney could hate. A high-profile banker decided his divorce was a professional setback, so he tried to write it off as a business loss. His reasoning? Marriage was an investment that didn't yield expected returns. He filed his ex-wife's alimony payments under relationship severance fees and even deducted his therapist sessions as executive mental recalibration. The cherry on top? He attempted to depreciate his wedding ring as a long-term asset with declining emotional value. When the IRS called him in for questioning, he showed up with a PowerPoint presentation titled "Marriage, a Failed Merger." The agents reportedly laughed so hard they had to pause the interview. His creative accounting earned him a $250,000 fine and a permanent note in IRS training manuals as a textbook example of delusion with spreadsheets. His ex-wife got the house, the car, and the satisfaction of knowing the government officially agreed she was the best investment he ever lost. Fact 10. The real estate mogul who claimed his mansion was a research lab. Next, we have the real estate mogul who tried to turn his $12 million Beverly Hills mansion into a tax-exempt research facility. His explanation? He was studying the psychology of luxury living. According to him, every infinity pool, imported marble countertop, and champagne fountain was a scientific experiment designed to analyze human comfort patterns. He even listed his butler as lead data analyst and his personal chef as nutritional research associate. The IRS inspector who visited said the only thing being researched was how far arrogance could stretch before it snaps. Things fell apart when auditors asked for his published findings, and he handed them an Instagram account full of shirtless selfies captioned, "Grind never stops." The agency shut down his research project, seized 2 cars, and hit him with enough fines to fund an actual science lab. His defense? "I'm pushing the boundaries of fiscal innovation." The IRS replied, "You're pushing the boundaries of common sense." Experiment failed. Results: stupidity confirmed. Fact 11. The influencer who claimed her face as a business expense. Then there's the Instagram influencer who decided the government should pay for her beauty routine. She filed a tax return listing her own face as a marketing asset. Botox? Maintenance of promotional materials. Lip fillers? Content enhancement costs. Even her daily green smoothies were filed under brand fuel. For a while, she bragged online about being a financial genius, claiming she'd hacked the system by turning self-obsession into a write-off. That confidence evaporated when the IRS requested proof of depreciation, as in how exactly her face lost value over time. She panicked and sent in before and after selfies with captions like Q1 glow-up results. The auditors didn't laugh. They froze her accounts. She tried arguing that her appearance was her business, since her followers only exist because of her jawline. The judge replied, "So does your ego." But we're not deducting that either. She ended up paying triple in fines, proving that beauty fades, but tax stupidity is forever. Fact 12. The luxury car dealer who hid millions in his test drives. This guy thought he'd invented the ultimate loophole, hiding profits inside test drives. Every time a client bought a Ferrari or Lamborghini, he'd mark the sale as a temporary test vehicle and file it as inventory still owned by the dealership. Translation: he sold cars, but told the IRS he was just lending them out indefinitely. The scam worked until a nosy accountant noticed every test drive ended up at the same address, his own house. Investigators raided the property and found 12 unsold cars neatly lined up in his driveway like a parade of financial delusion. He insisted it was part of a long-term market research study on consumer interest. The IRS called it what it was: theft by imagination. He lost his dealership, his license, and his fleet of Ferraris. During sentencing, he told the judge, "I just wanted to enjoy my inventory." The judge replied, "You'll have plenty of time to think about ownership. From your cell, not your showroom." Fact 13. The billionaire who tried to adopt his girlfriend for tax purposes. And then there's the billionaire who took creative estate planning straight into Greek tragedy territory. Facing a massive inheritance tax bill, he tried to legally adopt his 27-year-old girlfriend so she could qualify as a dependent and inherit his fortune tax-free. His lawyers begged him to reconsider. He said it was a strategic merger of love and accounting. The court didn't agree. The judge called it the most romantically bankrupt tax evasion attempt in modern history. When news broke, his family disowned him, his board of directors forced him out, and his fiancée daughter left him for an actual adult. The IRS still taxed everything, plus penalties for fraud and attempted deception of the court. His final defense was that it was all performance art about the absurdity of capitalism. The judge replied, "Then consider this your final act. Unpaid." He lost the case, his reputation, and his girlfriend. Moral of the story: if your relationship status requires a tax attorney, it's not love, it's a write-off. Fact 14. The billionaire who tried to move his mansion. Across the border, finally, meet the man who wanted to escape property taxes by physically escaping with his property. A billionaire developer in California decided taxes were too high, so he hatched a plan to disassemble his 20,000-square-foot mansion and relocate it, piece by piece, across the border to Nevada, where the tax rate was lower. He hired engineers, cranes, and trucks, treating the house like an IKEA set for the delusional elite. The problem? Nevada refused to issue new permits for a building that technically already existed somewhere else. Half the mansion ended up stranded in the desert, a $40 million pile of luxury rubble. He called it an act of fiscal rebellion. The IRS called it an expensive tantrum. When reporters asked what lesson he learned, he said, "You can't move freedom. Maybe not, but you can definitely move stupidity, brick by brick." So, which of these tax-evading geniuses deserves the crown for most creative idiot of the rich? Drop your vote below before the IRS audits you for laughing too hard.